So, when you think about investing in crypto, what's the first thing that comes to mind? For most people, it's buying coins, right? Bitcoin, Ethereum, you name it. But what if I told you there's a totally different way to play it? A strategy that doesn't bet on the gold itself, but on the companies building the entire digital gold rush. Today, that's exactly what we're digging into with an ETF called BITQ. You've probably heard this old saying before. During a gold rush, sell shovels. It's a classic for a reason. And honestly, this one idea is the key to unlocking a whole different way of looking at the crypto market today. So first, let's set the stage. We're going to draw a parallel here, because what we're seeing right now is what a lot of people are calling the digital gold rush of our lifetime. I mean, think about it for a second. Back in the day, for every one person who struck it rich finding gold, there were thousands who came home with nothing. But the folks selling the picks, the shovels, the blue jeans, they made money off of everybody, whether they found gold or not. They were betting on the rush itself, not one person's luck. And that, of course, brings us to today. The new frontier is crypto, and this massive digital economy that's being built from the ground up. So the question is the same. Do you want to bet on the gold, or do you want to bet on the tools that everyone needs to find it? Okay, so how does this whole picks and shovels idea actually work in the real world with real money right now? Let's get into it. This is the big idea behind the BITQ ETF. It completely sidesteps the need to guess which individual coin is going to be the winner. Instead, it invests in a whole basket of the public companies that are basically the engine room for the entire crypto industry. Now, this is where it gets really interesting. What are the modern picks and shovels? Well, look at this chart. The biggest slice of the pie, over 41%, is in trading and custody. These are the exchanges, the platforms, basically the storefronts where everyone goes to buy and sell. The next biggest is mining, the companies running these giant computer farms that keep the whole network secure. These are the absolute bedrock businesses. And here you can see the actual names behind those numbers. You'll probably recognize a few like Coinbase. That's a classic shovel seller right there. Then you've got the big mining companies like Riot Platforms and Hut 8. You can think of them as the massive industrial-scale prospectors that provide the backbone for the entire system. But you might be asking, how does a fund like this make sure it's really focused on crypto, and not just companies that kind of dabble in it? Well, that brings us to its core promise, being a pure play. See, the fund is built around a very, very specific rule. The huge majority of what it holds has to be in what they call pure play crypto companies. And this is the magic number, right here, 85%. This is so important. This fund isn't just dipping its toes in the crypto waters. It is designed to be deeply, fundamentally tied to the industry. So what does pure play actually mean in practice? It's not just a buzzword. It's a strict rule. A company has to get over 75% of its revenue or hold a ton of its assets in crypto to even qualify. This is the secret sauce that keeps the fund laser-focused on businesses that live and breathe crypto. Now, let's step away from the strategy for a minute and talk about the practical side of things. Because let's be honest, for a lot of people, investing directly in crypto can feel pretty intimidating. This approach is all about making that simpler. And this is a really key takeaway. Because it's an ETF, you can buy it in your normal brokerage account, just like you'd buy a share of any stock. There's no messing around with digital wallets, no worrying about private keys, no security headaches. It basically brings crypto exposure into a world that's familiar and regulated. Okay, but, and this is a really big but, just because it's easier to access doesn't mean it gets rid of the risk. And in the world of crypto, risk, and especially volatility, is a massive part of the story. We have to be crystal clear about that. Just look at these numbers. This is the fund's actual performance. In 2022, it got crushed, down almost 84%. But then, the very next year, it came roaring back with a gain of over 246%. This is not a smooth, gentle ride. It's a high-stakes frontier, and the performance shows you just how wild those swings can be. And hey, don't just take it from me. This is a direct quote from the fund's own documents. They are telling you, straight up, you have to be ready for a high degree of volatility and the real possibility of losing a lot of money. The potential for huge gains comes hand in hand with that risk. And so all of this leaves us with one final big question to think about. The picks and shovels strategy is supposed to be a smarter bet on the growth of the whole industry. But when that industry is as new and as volatile as crypto, you have to ask yourself, is selling the shovels really any less risky than digging for the gold? That's the crucial question to ponder as you look out on this new digital frontier.